Good morning. Today is Monday, December the 18th. The time right now is 7 minutes past 9 in the morning. And let's do a bit of recap as to what the market did on Friday last. And we can see that the Dow Jones Industrial Average basis, the micro E-mini S&P 500 futures has continued to edge higher into new all-time high. And the high traded on Friday was 37,784, which is, like I say, all-time high. Now, this market right now is very buoyant, but we can see that price action has actually slowed down. We have seen possibly the slowdown in momentum that suggests that topside, maybe short-term wise, could be quite limited going into the Christmas holiday. We can see that the next target probably is about 38,228. Again, this is new uncharted territory. Nobody actually know where the peak is for the time being. So based on targets, we can see that there is a nearby target of 38,228, and it's not that far away. And like I said, momentum is slowing down a little bit. That could actually impact negatively the price action going into the holidays and into the year end. So watch out for further gain, but further gain could be quite limited in my opinion. And in the S&P 500, similarly, the price action has not taken out the all-time high, which was last traded on January the 4th, 2022. And that level is 4,808 and a quarter. The high traded on Thursday, not Friday, was at 4,791 and three quarters. So again, this is not very far away, just basically a whisker away, so to say. So, but the market right now is struggling within this bracket of prices at 4,765 and three quarter and 4,739.5. So we can see this very, very small limited area of resistance is putting up the last defense before the all-time high can be achieved. So we also see a slowdown of momentum after the initial rush up after the Fed announced their pivot. So downside, I think it's still a possibility of a short-term pullback, but again, basis what we are seeing in the Dow as well as in the Nasdaq 100, momentum right now over the medium term is actually pretty strong, although short-term wise, there is a bit of a slowdown in the momentum. And over in the Nasdaq 100, again, basis the micro E-mini as Nasdaq 100 futures, we are at an all-time high right now in the Nasdaq futures contract. The last traded high was 16,767 and a half. The high traded last week on Thursday is 16,885 and a half. So we can see prices has gone to an all-time high, although the cash market has not caught up yet. So this is actually telling us ahead, the momentum suggests that we probably will see higher prices going forward. And the nearby target, as far as you can see, is at 17,221. Okay, so again, this is not that far away. We will have to wait for the cash index to catch up to the futures contract itself. And over in Asia, we can still see that the Japanese markets has still been struggling, despite the pivot by the Federal Reserve should actually cause a similar run to the upside in the Nikkei 225, but so far we have not seen it. In fact, the high traded at 33,130 last week was actually traded the day before the FOMC meeting, which after that should actually cause prices to go even higher as what we have seen globally in reaction to the Fed pivot. But unfortunately, we don't see the same thing happening in the Nikkei 225. And this could be attributed largely to the tomorrow Bank of Japan's meeting, in which they are going to be deciding on their interest rates, although nobody expects them to change their posture for now. Currently, the interest in Japan is negative 0.1%, which is the lowest among all the G7. In fact, probably around the world, the only central bank that still maintain negative interest rate is the Bank of Japan, and that has been the case since 2006, and that has been causing the decline in the Japanese yen relative to all the major currencies. And as a result, the Japanese yen has been the source of funding globally, and a lot of people have been borrowing Japanese yens and taking the proceeds to reinvest them into equity markets. And some of that has actually gone into the Japanese equity market that caused the Japanese market to actually rally to a 33-year high, which was last traded almost a month ago at 33,870. But since then, the market has been pulling back. And if there's going to be any change in the posture of the Bank of Japan's thinking as far as the interest rate is concerned, that could be a negative for the equity markets in Japan, because like I said, the Japanese has been a source of funding, and any increase in the cost of funding is going to cause possibly an unwinding of position in the Japanese equity market. So look out for that, and that's happening tomorrow as we are talking, because nobody knows exactly what time they will release the decision, because they have always been very mysterious about the timing of their release, and we will have to watch up tomorrow's equity markets in Japan. And over in Hong Kong, Hong Kong has benefited from the pivot by the Federal Reserve. Prices would look at one stage was almost at a point of breaking down further, but the low traded so far this year is 15,980. And that has been the case. The Hong Kong market has been so weak, and it has been falling and falling and falling for ages right now. And this last week we saw a bounce to 17,000. So this is actually quite interesting because this bounce here happened right after the Fed pivot. But however, it has been kept below the October close, which is at 17,025, which in turn was actually not that far away from the November close at 17,073. So taken together, these two levels here could be seen to be a cap that may actually prevent the Hang Seng Index futures to go any higher. So this morning, we see a bit of a pullback, currently trading at 16,690, and we could see that if the inability to close above the November close could actually see a continuation of the fall in the Hong Kong equity markets basis the Hang Seng futures. And over in the dollar has been a victim of the Fed pivot, because if the Fed starts to cut interest rate, it is seen to be a negative. Naturally, we can see that yield in the 10 years Treasury across the board in the Treasury market has been falling very sharply. In fact, the 10 years has fallen back below the 4%. Now, just 2 months back, we can see that the yield in the 10 years was at 5%. Okay, so in the space of just barely slightly over a month, we can see that the yield on the US Treasury has all been falling across the board, with the 10 years now trading at 3.95. Okay, last I checked. So we can see that the dollar has been falling also, and that the dollar index as a measurement of the strength of the dollar itself has gone down to as low as 102. So we can see that this 102 level is the lowest we have seen since October last year. So this is actually going to be the momentum going forward. Any kind of rebounds in the dollar could be seen to be technical, because if the Fed actually pivots, that could be a negative for the dollar going forward. So what we are looking at is currently this level at 103.29. That could be a barrier to higher prices going forward. And if the dollar seems to be rebounding somewhat, of course, that will see the euro dollars and all the principal currency all pulling back. And as what we are seeing right now, the euro dollar has managed to do a double top here. Last week high on Thursday was 110, okay, barely above 110, and which is almost in line with the previous high here traded at the end of November. Okay, we can see that this double top here is probably capping the current run in the euro dollar, and we can see the pullback as the dollar index starts to rebound in on Friday. So we can see that right now where the market is actually hovering at the November close. So it will be very interesting where the euro dollar close going into December. Okay, I'm not going to towards the end of December. So the level is 108.90. Okay, so we want to see how the market reacts here. If the market close below this level, we will see further losses ahead. But if not, then I think the market is actually primed to go higher, assuming the dollar continue to slide. Okay, so sterling wise, we can see that sterling has actually managed a marginal high relative to what we saw in the euro dollar, which has a double top. So we can see the sterling is actually on a relative basis stronger than euro dollar. We were high at 127.94, and although prices have been pulling back, but this is basically quite a bullish development for the sterling. The November close logically will be where the support is at 126.20. We will see if we can get a reaction from there. Now, dollar yen, like I say, has been falling and falling for ages on the back of a different interest rate differential between the Japanese banks, the Bank of Japan, and the rest of the central banks. But we can see that has been the case for a while going into this year. Trading at one stage, the dollar yen was almost looking that it will break above last year's high at 151.94. So we can see that the high traded did not quite break above this level. The high traded this year is 151.91. So it did not break the 151.94 high of last year. So the prices has been falling back, and largely due to an unwinding of positions from those who have been very long the dollar yen. And we can see that sentiment has carried forward now that the Fed has signal that it's going to pivot. That added more fuel to those who are still holding on to a long dollar yen position, meaning to say that they are more likely to be cutting their position and maybe even going short. So what will be interested to see how much more it can rebound. So right now we can see dollar rebounding a little bit, but the rebound so far in the dollar yen has been quite muted. From a low of 140.95, it has been doing very little. The currently is trading at 142.30 thereabout. So very little rebound, and the bias is to the downside. Aussie dollars continue to strengthen. We can see that the Aussie dollars, very much like the sterling, has been benefiting from the weakening of the dollar. We can see that the high traded last week on Thursday was 0.6730 thereabout, and this is a pocket of prices that need to be overcome. The level is 0.6712 to 0.6740. Only a close above this level can see higher prices going forward. Okay, immediately I think there is this very minor pocket of support here. We will see since so far the prices seems to be holding up very well here. Maybe a dip back into this pocket of prices may actually cause prices to rally one more time. And over in the dollar Canadian, of course, if you have seen the dollar index chart, this chart does looks very similar. We can see dollar continues to slide, although we don't see the rebound like what we saw in the dollar index. But I think the dollar Canadian is probably geared for a rebound as well, assuming the dollar index continues to maintain its momentum going forward in the rebound. The low so far traded on Friday is 133.50, and currently trading at 133.80 thereabout. Very little rebound, but I think there's a bit of a potential for further gains in the dollar versus Canadian on the short term. And as far as precious metal is concerned, we can see the gold prices has actually reacted positively after the Fed pivot signal to a high of $2,047.94. But since then, it has been losing momentum, trading back lower. And technically speaking, the high traded here at $2,148. 2,149 or thereabout. We can see that this high here has created a big pullback, and this pullback does looks very deep, but technically I don't think that the pullback is done yet. I think there's further potential for further losses ahead. If we get a three-wave decline, the market could be targeting somewhere around $1,870, perhaps to even lower at $1,830. So based on what we are seeing so far, there's a potential for $1,000 pullback from the high of $2,149. So if the market closed this year or in December below 1,960, that would be a danger signaling that we could see further losses into January of next year. Okay, over in the silver, we're seeing basically a replica of what we see in the gold markets here. A high traded at $25.91. Although this is nowhere near the all-time high, but this is also showing us that silver has also benefited from the pull in the gold market. But since then, the market has been pulling back, and so far the rebound in the aftermath of the Fed pivot only managed to see silver prices trading to a high of $24.29, and it's also coming, it's also pulling back. Although this rally has been very strong, but based on momentum, based on pattern, there's a possibility of a three-wave pullback as well. And if we do get that, we probably will see sub $20 per ounce, and that could be a good buying position, okay, in my opinion. And in the oil side, we can see oil market continue to rebound from the low of $67.68 basis the WTI traded in the CFD contract. You can see that high was actually traded midweek of last week, and market has managed to rebound to Friday's close to near Friday's high at $72.42. And this morning we have a bit of a bounce up even higher to $72.61. And this is actually playing up quite well with the potential for crude oil to actually test the $76 per barrel. But I think that's all it can do, because the November close is going to be the hard cap that is going to be preventing higher prices unless the price can close December above the $76.40 closing in November. So that is laying the groundwork for further losses in crude oil, at least in the short term. Now, as far as digital assets is concerned, we can see that Bitcoin continue to struggle. It has benefited also from the FOMC meeting. We can see that prices was hovering about $40,000 and it rushed up to $43,430 thereabout before pulling back. So this pullback does appear to be a three-wave pattern, and if it's so, then we are looking at perhaps a test of 39,000 to as low as 38,000. So anywhere that's lower, it would be great, because this market right now is deeply in bull market territory, and its further gain is likely to be the case going forward into 2024. So this is all I have for you for today. In the meantime, you take care, and I'll come back to you tomorrow with an update. Bye-bye.